Let me be quite clear. You need to buy every dip in sight for the remainder of 2022. A lot of people expect us to go back down to new lows or even lower than that. And I'm here to tell you that is a little bit of a far-fetched dream. And I wish that happened. I got a lot of cash and I hope that happens. But it's a far-fetched dream now at this point. I'm going to take you through exactly all the stimulus that's about to hit the market over the next 6 to 9 months. No one is even talking about this. They have no clue. They have no conception of what's about to happen here. And everybody's so caught up into the Fed. That's all you hear about, right? You turn on, financial networks, anything. It's doomsday or it's Fed. And that's about it right now. And people don't have any clue of what's about to be unleashed from states and federal government across the board. And that's what I'm here to take you through in this video, because no one is talking about this right now, because this isn't this type of stuff that gets views. Fear mongering, it's going to be the greatest crash ever. All these sorts of things that gets views, right? Because everybody's like, oh my gosh, it's so scary. But no one's even talking about the ridiculous amount of stimulus that's about to hit the market over the coming 6 to 9 months. And I feel like I'm the only one here to give you guys that information. I appreciate you joining me. And by the way, just so you know, we got a massive flash sale coming up on Labor Day for the Become a Master Stock Market course. We haven't done a deal on that in like 100 years. So if you want access to that and get the deals shot to your inbox when it drops Labor Day, check out pinned comment down there, okay? So I put it like this, right? The Fed is what everybody's so focused on all the time, right? It's out there. Everybody kind of has a dislike toward the Fed, so everybody tends to focus on the Fed and act like all the problems come from the Fed, when in reality, if you want to look for somebody to blame for inflation and all the money pumped out there, look no further than your own state. Look no further than the federal government. Who you think sent you that stimmy check, okay? It's the states and the federal government that are the main culprits behind this whole wave of massive inflation that we've really gotten in the economy, along with obviously supply chain problems as well. But that's the thing. Everybody gets so caught up into what the Fed's doing or what the Fed's not doing, and the Fed. And the states and the Fed, at the end of the day, the federal government, that is, these guys are just in better camouflage. And a lot of people don't like to address this, because when you start to get into states and federal government, then you start dealing with politics. Then you start talking about Republicans and Democrats, and no one wants to talk about that, right? Because they either usually despise politics, or they have a super agenda against Democrats, or they have a super agenda against Republicans, right? And they're super biased, so they don't want to hear anything negative about their party. And if you give them any bit of anything negative about their people, they're automatically to attack the other side, and you're not even in a conversation anymore. Now it's just become a debate and an argument, okay? And so that's why everybody just likes to look at the Fed and point fingers at the Fed, because the Fed is not a Democrat, the Fed's not a Republican, so you don't get caught up in all that, right? Whereas there's really, at the end of the day, it's the states and the federal government. They're about to flood a lot of money out there. And I mean a lot of money over, let's just call it the next 6 to 12 months, that people are not even aware of, okay? So first off, I don't know how many people even catch up with stuff like this. This was announced a few months ago, but basically the education department basically said if you went to this if you're a former DeVry University student, basically they're just kind of like canceling the debt you have for that, okay? So it was like 415 mil. That was just the start of child's play, okay? Then we got this. Biden administration cancels, this was a week ago or so, Biden administration cancels $3.9 billion in student debt for 208,000 borrowers defrauded by ITT Tech, they say. Okay. Now, people can have an opinion on that. That's right, that's wrong, whatever. Okay. That's not what I'm here to debate. But at the end of the day, this is a massive form of stimulus. There's basically $4 billion that people don't have to pay back right now, right? Think about it this way. This is actually just child's play. We're going to get into the big numbers in just a moment. This is just a little test by the government, I call it, okay? A test. They do tests all the time that people don't even really realize, okay? So let's imagine, I have no clue what the mortgage is of this house. It might be $10,000 a month, I don't know. So let's say the government's like, Jeremy, you don't have to pay this anymore, right? We're just going to cancel that debt. Well, shoot. that's an extra whatever amount, $10,000 or whatever, that I could just put out there in the economy, right? Or buy stocks with, or buy another house with, or whatever, right? If you cancel people's debt, it's a form of stimulus. And now people are going to have more money to go spend and do stuff. That's the bottom line. That's just another form of stimulus. Imagine if let's just say everybody's credit cards were canceled tomorrow. Well, shoot, everybody's got a lot more money they can go out there and spend in the economy, right? Let's say no one had to pay their car loans tomorrow. Well, shoot, all of a sudden we got a lot more money we can spend out there in the economy, right? That's just how it is. This is a form of massive stimulus, okay? But that's just child's play, like I said. Biden's decision on student loan forgiveness could come as early as Wednesday, okay? So this is basically talk that they're going to cancel more than $10,000 in student debt per borrower. We have never, ever seen on a per-person basis that form of stimulus ever before, okay? Where we're talking about, there's some in this party that want to see $50,000 per student canceled, okay? So keep this in mind. If we're talking hundreds of billions of dollars of basically stimulus, that if that goes through and that happens and they just cancel, $10,000, $15,000, $20,000, whatever, $50,000 of student loan debt, that's just a massive form of stimulus out there. That's a ton more money. I mean, some people might even have less than $10,000 in student loans that they're paying off right now, right? If that's just canceled, shoot, that's more money you can go spend at the mall, you can go spend over here, you can do over here, you go to the restaurant, right? At the end of the day, it's a massive form of stimulus. And I mean, we look at some of these numbers over, let's call it the past, in 2021 and in 2020, when they were giving out the $1,200 stimulus checks and things like that. And that would seem like a pretty big amount, $1,200 stimulus checks. And then you got more if you had kids and you made under a certain amount and things like that. But that was like small amounts of money. If we're talking $10,000, $15,000, $20,000, $25,000, whatever the number is, I mean, that's a whole different game there, okay? And that's a massive, massive form of stimulus that's likely coming, okay? So that whole wave is going on right now, okay? Now, that's a little bit of federal side, and we're going to go back to the federal side in just a moment here, okay? But first, let's talk about states. If you didn't know, your state is likely doing, basically prepping for massive forms of stimulus as we speak right now, or they have been over the past few months. And these are supposed to be to help you with inflation, okay? And likely, your state is doing something where either you're going to get a stimulus check sent to you of some kind, which is basically like an Inflation Reduction Act type check, they call it, or you're going to get some sort of tax return, basically this winter or springtime coming up that's going to, give you money essentially, okay? So let's start out here. We're talking about a massive amount of states. California, the biggest of the big dogs out there. If you didn't know, basically they're going to be sending individuals up to $1,050 between October and January, okay? So we're talking about the biggest state is about to flood stimulus money out there like it's nobody's business. How many people live in California? 43 million or some insane amount, right? So they're just going to flood stimulus money out there like it's nobody's business, and that's just starters. What about Colorado? Colorado's got a big deal going on. So if you live in Colorado, that money's going to be hitting October 2022 through January. What about Delaware? Well, Delaware's got a relief rebate program that's signed into law, which is for a one-time $300 payment to be made to each of the state's adult residents, okay? That's coming up here. Florida has a deal coming up here. Georgia has a deal coming up here. I mean, these are massive states. Look at the population of Florida, okay? This is no joke as holy smokers. Hawaii's got a deal coming up here, which Hawaii, man, based upon grocery prices, we have somebody in the private stock group that lives in Hawaii, and they took pictures of, I think it was some like TTCF products and stuff at a store in Hawaii, and it was like, I don't know, it was like $8.99 or something like that. I was just like, my gosh, man, the prices in Hawaii is ridiculous. If it's anybody that needs a dang, let's call it some help, man. It's Hawaii residents. They get screwed with pricing. I'm like, oh my gosh. But you got some of the best weather ever, over there, okay? Idaho. Yeah, a little money coming for you in Idaho. Illinois got a bunch of stuff coming. And checks will be sent the week of September 12th. Keep that date in mind. Indiana's got some money coming. Maine's got some money coming. Massachusetts has some money coming. New Jersey, oh yeah, good old New Jersey's got some money coming as well. New Mexico, live in New Mexico, anybody? They got some money coming for you. Oregon, South Carolina, all got some money coming for you as well. Now, usually the catch is, in regards to most of these programs, is usually have to make less than 6 figures a year, or specifically less than 200,000 a year. So any of my big ballers out there that are watching this video, you're not going to get any money, as you never do. Okay, you might get an extra tax on you, but yeah, it's usually anybody that makes under 200,000, or some of these situations might be under like $125,000 out there in terms of who actually receives the checks and the rebates, the money back, however you want to frame it. Okay, they are going to frame it differently depending upon, you know, how they have to for their kind of political party of that state and things like that. Virginia has money coming for you, okay? So nonetheless, guys, we're about to get a flood of states flooding stimulus money at the end of the day. They're going to call it inflation reduction things and things like that, or, you know, to help with this. But at the end of the day, it's basically stimulus money that's going to be flooded out there in the market. And we don't know if that's the end of it. Like, here's the thing. All these deals have been signed into law over the past few months. Who's to say they're not going to do another round in a few months, right? And another round in a few months. What if they like the results? Think about that for a moment. What if inflation is still relatively high, higher than they'd like, right? Who's to say California's not going to do another check in December, January, you know, February of 2023? Who's to say that, right? Once you open up that door, that's the thing. Like the thing that happened with Rona is it opened up the door for a lot of folks that had already been wanting to do things like stimulus programs and stimulus checks and things like that. You know, I don't know if you guys remember Andrew Wang, or Andrew Yang, I think his name was. I'm sorry. I don't know if you guys remember Andrew Yang and his whole thought process around essentially what he wanted to do. Okay. Anyways, you can look it up. Oh, man. Yeah. This is a problem when you don't edit your videos. Oh, boy. Okay. So that's just for starters there. The House passed a sweeping tax, health, and climate bill. If you haven't heard about this, this is the Inflation Reduction Act, they're calling it, okay? And it's a more than $430 billion package that the federal government is basically doing, okay? So, you know, when you see these numbers, they are not small numbers by any stretch of the imagination. These are massive numbers. And, you know, if you're wondering where all this this stuff comes from, it's the feds in the state. That's who's always pushing these sorts of things, okay? What about this? The semiconductor production plan, okay? I don't know if you guys heard about this, but this is like $50 billion or so, and from what I heard, a lot of the money is going to go to potentially Intel in this whole deal, but it's tens of billions of dollars that will be spent out there, and that will allow a bunch of companies to either spend more money or potentially even do share buybacks and things like that. We'll see about that, but don't be surprised if that happens maybe a little down the road. They might not want to do it at first because it might look bad. They're doing a bunch of big share buybacks while the government's potentially giving them a bunch of money, but that's going on, okay? So that's going to unleash obviously a bunch of building. There's already a lot of this semiconductor plants and whatnot being built. I know in Arizona, oh my gosh, you know, I have a house in Arizona. It's crazy, like how much semiconductor manufacturing. TSMC has this massive facility they're building that's probably 15 or 20 minutes away from my house in Arizona. And then on the east side, you know, Intel's building some massive facilities that are like tens of billions of dollars over there. So, you know, if we're talking about the government's going to flood a bunch more money out there, this is a situation that there's just going to be another even bigger building boom, which at the end of the day, you know, obviously that produces a lot of construction jobs, right? But the other thing is, the jobs of the folks that work there, those are good jobs. Like I looked at like the TSMC facility and like what those jobs, it's going to be a lot of people that make, you know, let's just call it 100K plus a year from those jobs. So they do produce, I will say, good jobs. And obviously from like a national security situation, because we get so many of our chips from Taiwan, it seems like there's always a growing distrust of what could potentially happen between China and Taiwan over time. And obviously we have so many companies in this country that are very dependent upon chips that are made in Taiwan for their businesses. It does become at a certain point, right, a national security risk if China was to, you know, do anything with Taiwan. It is a big risk for us. So obviously the government's if they're gonna look at anything that's a sort of risk, they're gonna say, okay, we're gonna spend money. Look at how much we spend on defense all the time, just because something might happen. I mean, it's crazy how much we spend on defense in the United States, but that's just what it is, right? Now, in regards to all that, we got a massive flood of money, and that's probably not even it. I probably just covered the surface there of like all the stimulus type money that's going to be coming out in this economy over the next 6 to 12 months. But on top of that, okay, here's the deal. Everybody wants to talk about the Fed this, Fed that. I think the Fed's going to be set up to pivot in 2023. Here's the deal, okay? CPI is going to be going down more and more and more in terms of the rate of growth throughout this year, outside of a freak situation where oil price went to the roof again. And there's already talk that the oil markets could be getting manipulated a little bit. Basically, it's thinly traded out there. And I don't know. I feel like it's a subject I don't even want to speak on too much. But I'll just leave it there, okay? If you want to look more into that, you can look more into that rabbit hole. I don't really want to touch that too much. But nonetheless, okay, the price of oil is, let's just call it lower probably than what you're seeing than it really should be, okay? And I think that's going to likely continue on. I think if you're thinking energy is going to continue to pump through the roof for, you know, the next 6 to 12 months, I think it's a tough proposition. So I'm looking at CPI coming down and down throughout the rest of this year, which is obviously something the Fed's going to want to see. We also have weak earnings going on simultaneously. So, you know, if you've paid attention to this earnings season, companies are reporting weak earnings, man. Just bottom line. I don't care if you're looking at Apple. I don't care if you're looking at the big techs. I don't care if you're looking at retailers. You know, we've seen a lot of very weak earnings. So if we see weak earnings, right, we've heard about some layoffs, obviously, out there, right? We see CPI coming down. We see a full cooling off of the economy, which is clearly playing out right now. The Fed's going to be in a position where, for the remainder of this year, they're going to be able to take it easy, okay? And any rate increases are going to be minimal for the remainder of this year, okay? And in 2023, I think the way they're going to look at that is I think they're going to be in a position where they could even either cut or just keep rates the same, which is a big shift for the market because the market has gotten very used to the Fed just raising rates, right? And, you know, you have to kind of adjust for that in your valuation models and things like that, right? Whereas now, in my opinion, starting in 2023, we're either going to have the same Fed funds rate or we're going to have even a lower Fed funds rate, and they might become accommodative to the market and start doing things to help the market, especially if we get, let's say, when the fall time earnings come out, they're weak as well, right? Let's say Apple's revenues go negative. Let's say a lot of companies have negative commentary and things like that. They'll give the Fed even more ammo to say, you know what, going into 2023, we're either going to cut rates or we're just going to keep them the same. We're not going to keep raising, along with CPI coming down as far as the rate of growth, and you're at 7%, then 6%, 5%, because then the Fed's like, okay, everything we wanted to do is happening. The economy is clearly slowing down in a big way. Inflation is clearly slowing down. Okay, now we can potentially either help the market or just keep things kind of the same. And so that's where, you know, if we go back to kind of the start of this video, this kind of belief or hope, and I call it kind of like a hope and a prayer situation that we're going back down to 10.5 on the NASDAQ or lower. I think it's just a very tough proposition now at this point when you look at the money that's about to be flood. I mean, absolutely flood out there on the stimulus side. And when you're talking about the Fed, has already done most of their work, in my opinion, and now they just maybe got 1 or 2 slight raises for the rest of this year. 1 for sure. 2 is like debatable if they're going to do that. In 2023, I think it's going to be a very tough environment for them to raise rates in. I think if anything, they could potentially cut, which obviously would be a huge boom for the market because, you know, we know how that kind of game goes, right? And so, yeah, that's just kind of some food for thought, guys, that I thought I would share that perspective out there. So what I'm personally looking to do for the remainder of this year, especially once we get into September, I'm in a very strong cash position now at this point in time. So what I'm personally looking to do is any major weakness we get in the markets, any stocks I really like for the long term, you guys know a lot of them that obviously I like for the long term. I don't think I need to, you know, name any names. I'm just going to be looking to add those for the remainder of this year and kind of position myself well for 2023. I will always keep a good amount of cash. I likely won't get down to as much of a cash deficit as I got back in June, outside of a freak situation where we crash more than June. I just think it's becoming more and more of a far-fetched fairy tale now at this point in time, based upon everything I'm kind of looking at here, guys. So just keep that in mind. Much love as always, guys. I appreciate you joining me. Once again, if you want to get in on that flash sale we're going to have for Becoming Master Stock Market, check out the pinned comment down there, and we'll shoot you over that deal as soon as it drops on Labor Day. Much love and have a great day.